Hello, everyone, and welcome back to Legend Finance, your one-stop platform for financial growth and literacy. Remember to hit that like button and subscribe to our channel so you never miss an opportunity to boost your financial knowledge. Today, we're diving into a fascinating topic: building wealth with dividends and capital growth. Whether you're a seasoned investor or just beginning your journey, there's something in it for everyone. You'll learn how to harness the power of compounding, understand the benefits of reinvesting dividends, and get the inside scoop on maximizing capital growth. So buckle up as we take you down the highway of financial prosperity. Let's together build a future that's not just rich, but truly wealthy. Dividends explained. Dividends are simply payments that companies give to their shareholders. There are two main types: qualified and unqualified dividends, but more on that shortly. Now let's shift gears and talk about capital gains. Capital gains explained. Capital gains are the profit you make when you sell an asset for more than you bought it for. Like if you buy something for $100 and sell it for $110, your capital gain is that $10 profit. Just like dividends, capital gains come in two types: short-term and long-term. We'll dive into that soon, but first, let's differentiate between dividends and capital gains. Dividends and capital gains differences. One key difference between dividends and capital gains is how they're taxed. With dividends, there's little choice involved. If you own shares in a company that issues dividends, you get them when they're paid out. You can't control this. On the other hand, you decide when to realize capital gains by choosing when to sell your asset. Capital gains aren't realized until that sale happens, so you could hold on to an asset indefinitely, postponing the capital gain. Another contrast lies in the potential returns. The sky's the limit for capital gains. How much an asset appreciates can theoretically be boundless. But dividends are more predictable. They're capped, usually at a similar level to past payouts, so you can generally anticipate what you'll receive. There's more risk involved with capital gains because it's uncertain how much you'll get. In contrast, large, dependable companies typically distribute dividends, frequently in industries like telecommunications or utilities where there is less competition and stable profits. Meanwhile, growth-oriented sectors, such as tech, are often where investors seek capital gains. They're banking on these companies becoming more valuable over time. To sum up, capital gains can potentially be limitless, but they're less predictable and involve more risk. Dividends are capped, more predictable, and come with fewer risks. Next up, let's discuss the tax implications for both dividends and capital gains. Dividend and capital gains taxes. Now on to taxes. Dividends can be qualified or non-qualified. In brief, qualified dividends are taxed at the long-term capital gains rate, while non-qualified ones use your personal income tax rate. This typically makes qualified dividends more desirable due to their lower tax rates. The same concept applies to capital gains. Short-term capital gains from assets held for less than a year are taxed at your personal income tax rate. However, long-term capital gains from assets held over a year are taxed at special rates ranging from 0% to 20%, which are typically lower than your income tax rate. This makes long-term capital gains and qualified dividends more desirable from a tax perspective. Which is better, capital gains or dividends? So you're asking the age-old question: dividends or capital gains? Which is better for higher returns? The answer isn't one size fits all. It depends on your personal risk tolerance and investment goals. Here's the deal: if you're looking for capital gains, you're betting on a company's growth. You want it to expand and increase in value. If you're chasing dividends, you're targeting companies that offer consistent income. You've got to figure out what's more crucial for you: growth or income. And guess what? You don't have to choose one over the other. A blend of both could be your best bet. That's what I do, and it works for most individual investors. Always remember to think long-term, whether you're leaning towards dividends or capital gains. Chasing dividends for instant cash or betting on a company to skyrocket overnight isn't a good strategy. Also, as an investor, you should aim to buy assets with low fees that can help cut down your taxes. This can have a big impact on your decision between dividends and capital gains. And whether you're investing in individual stocks, mutual funds, or hopefully index funds, always aim for low fees to keep more of your gains in your pocket. And don't forget the golden rule: diversify. You don't want to put all your eggs in either the dividends or capital gains basket, but strive for a balance. Everyone's investment journey is unique, and there's always more to learn. The key is to understand your goals, strategize accordingly, and be patient. Happy investing! Take action. When it comes to mastering personal finance, it's essential to understand that learning is an ongoing process. It's not just about immediate solutions, but a journey of discovery and continuous improvement. With the objective to excel in managing cash flow, sharpening investment strategies, and enhancing saving skills, there's a wide universe of resources and information available to tap into. Educational content, from books and articles to podcasts and videos, provides valuable insights on various aspects of personal finance. It's crucial to explore this diverse range of information, as it allows everyone to broaden their understanding, learn from different perspectives, and adopt strategies that best suit their financial goals. However, this learning journey isn't just about individual growth. The beauty of it lies in its inclusivity. It's a collective endeavor where everyone can grow together. Sharing insights, discussing strategies, and learning from each other's experiences are all integral parts of this journey. As everyone navigates their financial path, the shared knowledge and experiences become stepping stones towards better financial literacy for all. Furthermore, this journey is not a race. It's more of a marathon where consistency and persistence are key. There might be challenges along the way, but each hurdle presents an opportunity to learn something new. By maintaining a positive attitude and staying dedicated to the process, continuous learning becomes a rewarding experience. Finally, it's worth noting that this journey towards mastering personal finance is also about adaptability. The financial world is dynamic, and strategies that worked in the past might not be as effective in the future. Hence, staying updated with the latest trends, understanding new financial products, and adapting to changes are all integral to this learning process. In conclusion, the path to mastering personal finance is a journey of continuous learning, sharing, and adapting. It's an inclusive process where everyone learns, grows, and benefits together. So let's all keep exploring, keep learning, and keep improving on this shared journey towards better financial literacy. Thank you for joining us today on this insightful exploration of dividends and capital growth with Legend Finance. We've navigated the labyrinth of compounding, decoded the allure of reinvesting dividends, and unveiled strategies to optimize capital growth. We hope that our time together has not only expanded your financial worldview, but also kindled the flame for your wealth-building expedition. Remember, the capacity to sculpt your financial destiny resides within you, and making educated decisions can transform your wealth landscape. From those just embarking on their investment journey to seasoned professionals enhancing their financial acumen, our purpose at Legend Finance is to arm you with the knowledge and tools to thrive in your financial endeavors. It's a voyage we're honored to accompany you on. Consider this video a milestone on your financial roadmap, but know there's a universe of knowledge beyond today's lesson. Continue probing, question the norms, and always challenge your understanding. We invite you to learn from your ventures, embrace mistakes as learning opportunities, and celebrate your growth. The path to financial independence is not a straight dash, it's a marathon with twists and turns we're all learning to navigate.